real quick for you, Nate. You see this is a beautiful inside bar. 1, 2, 3, 4, 5, 6, 7. 7 count. But we gapping up. And we gapping up to about 38, which represents, right now we trading about right here. Right where this line at. So we gapped up on this candle, but we still inside this bar. You do have some major resistance right here at 38.50. That's also the top of this red bar. That's going to be that's a good resistance, 38.50. So here's the scenario. If it gets past 38.50, you say major resistance at 40. That's a hell of a long way away. But yeah, it definitely is going to 40 and probably even higher. The best moves come from failed moves. With this being a nice bearish consolidating flag under the 200 moving average, if this actually gaps above this and goes higher, then it's going to run all the way up to this upper band, probably about $42 almost. And that may be over the next several days, but that's the ultimate target if this pattern fails. If we gap up to 38, maybe push up to 38.50 and start tailing, it can put a tail in and even come all the way back in. I haven't read the earnings report, but this is definitely a bearish setup that we look for to short, because it's all inside bars consolidated. So it could either gap up. The 38.50 level is the level to watch. So what I'm doing with that, this is the pricer tool. Okay. You see I can put the, so it's only a few strikes. You can go with the 35 or the $40 puts. If you're looking for puts, right now they're trading about 60 cents. But here, if it gets up to 38.50, okay, then you go ahead and push calculate, and notice right here how it changed the theoretical value when I calculate that. Those should be worth about $18 if it gaps up. So I would say even just split it $15. Be it 2 or 3 of them $15. If it drops back down to where it's at now, which means that it'll open gap and crap back down. It should be about 45 cents. So you might be able to get them $15 and sell them for $40. That's the play. Or you could play these. These would be about, you want to bid, let's see, 38.50. I'm sorry, these are calls. I gotta go to the put. 38.50. Make sure you click puts. That's how we calculate this. So about $2.17, 18 cents. And then if it goes down back to 36, and we want to be conservative, so we even say you got 22 days to hold it. So we say Saturday, Sunday, Monday, take 3 days off of that. Just say even 18 days left. If it gets back to the 18, which, because the market is weak, it could possibly do it over there. Those will be worth $4. These will be worth $62. So you can bid the 35 puts for $15. 15, no more than $20. You know, watch it how it hits. You need to be watching that on this chart. See, okay, so we got the daily chart. This is a daily chart. I'm pulling up a weekly chart for you real fast. So the weekly chart, it's less clue. So we actually gapping up to about right here on this weekly chart. So we about right here. We actually gap back above the 50 and 200 moving average. But like once again, the open of this candle is 38.50. It still has to take this candle out, and you got the 20 move. So this is the level of white. Like I said, if it gets above this candle, then all bets off is running back up. But, you know, we gapping up, but we still inside this candle when we gapping up. So it can gap up and it might fall back down, you know, or it could just range around. So you're not getting a whole bunch of clues from the weekly other than, you know, we got to see how it opens. So now this here is a little bit more bearish because it went down, but just remember, it's back up here. It's back above the move. This is where it's trading at. So it could run up, but I mean, this candle would have to turn green. And if it turns green, then it's making new highs. But you do got lower lows. Yeah, this is not a bad stock to short. And you actually take this trend line here and draw right across there. You can see it's right at that, you know, it's been lower lows, lower highs. So it's going to break out one way. You got a triangle pattern. You know what a triangle pattern is. You just take this drawing tool, trend line, high value candle to high value candle. It's one of these two. It's definitely this one right here. So boom, see that nice little trend line? 1, 2, 3. You know, hit about 3 or 4 times. So, I mean, that's the nutshell how you play this one. If you go to the intraday, so you know what to watch on the intraday. Let's look at the 10-minute. Yeah, see, it's all the way up here. And that price is exactly 38. So it's gapping up. You're not gonna get a lot. You're gonna look at the hourly chart to see. You also got the 200 moving average right there, 38.78. If it gets 38.78, those 35 puts will be worth about 12 cent, 10 cent, 10 to 15 cent. So I mean, that's the play. 35 puts, but then it's got to get all the way back down. But it doesn't have to. Just got to get back to 36, which would be a total wiping out that day. So it's bearish. You don't have to get 36. So you'll be watching this to see if price runs back up into the top of this candle. That relates to that day. The candle, the high of this candle is actually 38.27. So really, that's really the sign. I mean, but there's not hardly any value in this candle, so you only give so much stock on it. Let's see. And the high of this candle is 38.69. So that's really lining up with the 200 moving average. There's a lot of resistance there. It may take a few days to get there, if it gets there. So once again, not necessarily tell you what to do, but just telling you the price of the bid. Let's say you thought it was going to run up to 40. You can go back here and go to the calls. Let's view the chain. Price right now, 36.90. Wouldn't be in 36.90. The $40 calls are trading like 25 cents, 27 cents. They price pretty fairly for that amount of current and volatility. Yeah, I ain't gonna get into how you go and look at the historical volatility and change it. We ain't gonna change that yet. So let's just say 38. You calculate 38. So now the $40 should be worth about $50. So those should open up to about 50. And if it goes to 40 today, be worth 128. Well, I don't think it'll get to 40. Let's just say 38.60. So you're bound for 50 and sell them at 68. That's if it gets there, the first major resistance. So it's a neutral. I guess the less risk is to the puts because you get that. But you know what I'm saying? That's where it go. But one thing though, let's say that it goes back down to 36. If it goes back down, yeah. So those $40 puts would be 36. But if it goes back down, then that's not a good buy.